So there have been talks about a bear market since a few months back, and many of these indexes in the US, the Dow Jones, even the Nasdaq, has traded lower and pushed to new multi-year lows. Alright, and the question I get all the time is, how do we actually profit in a bear market? Hey guys, Joey here, top tier MyZero trader in Philips Securities, and this is the question I get all the time, and there are a couple of ways you can do that in a bear market, and one of those ways would be to buy stocks. And if you buy stocks in a bear market, if the market is weak and you buy and it goes down and you buy, more often than not you'll get stuck and you'll be sitting on losses. So that's what you can do. You can just buy stocks and get hit, alright, or you could do nothing as well. You can do nothing, wait to see a good reversal or some signs of it bottoming out, then you can start to get in. That's what I would encourage you to do as well. Of course, there are certain sectors that are still doing well. Of course, they might have come down a little bit in the short term, but they still look good in the upwards direction in terms of the uptrend, and that's where you want to focus on even in a bear market, because these are stocks which are in an uptrend. Alright, so that is pretty much what you can do in a bear market. But what about riding stocks that are heading lower? That means in a bear market, if stocks were to head lower, you are actually happy, you're actually profiting from the downside. That means it goes down, you actually make money. Alright, how do you do that? I know some of you might be confused. How do you do that? Is it even illegal, and how does it work? That's what I'll cover in this video. So yeah, you can actually do that. You can actually make money from stocks when it is going down. And how to do that? You can take short positions. So before I go into these two that we use, let me just share with you some of these ideas that we came up with, some of those projection targets, some of those positions that were taken on certain stocks, right? So let's take a look at this stock right here. This is called Wilmar. So Wilmar has been holding above this really strong $4 support right here since like 2020 for like about 2 years. And when we broke this $4, look at this right here, kind of rebounded 3 to 4 times. And when we broke this $4 level a couple of weeks back, maybe 1 or 2 weeks back, that's where some downside targets were drawn, because that's where we can potentially hit lower. Alright, so you can just sit by and do nothing, alright, or you can actually take a short position, right, to ride the downside, and if it hits lower, you actually make money. Alright, so these were the targets that were drawn. Look at this right here. Downside targets were drawn from like $4 all the way down to like the next support level at about $3.50, about 11% downside. So if it actually does happen, that's where you can make money. So this is what happened just a couple of weeks back. Maybe let me share with you what Wilmar says right now. So this is Wilmar right now on the 13th of October. So it's about 2 weeks back, as I mentioned, we kind of broke this $4 level. There were some downside targets that were drawn. You can see right now the downside targets have already played out, and we have kind of hit our target at about $3.50. In fact, I think today the low was at about $3.51. Alright, I started to see a bit of rebound. So normally it's good to lock in some profits. You can buy back the position and lock in the profits by riding the downside. So not to worry, I'll show you exactly how to do it later, and what tool can be actually used. But what I'll show you is that you can actually profit by riding stocks as it hits lower. So from like about $3.90, if you ride it to about $3.51, the low is $3.51, but you want to buy back at $3.52, $3.53, or even now, that's perfectly fine, because you've already ridden, right, most of the downside already. Alright, so this is Wilmar, right, the first counter I shared with you, and maybe just let me cover a few more counters, and maybe even take a look in the system that guides us as well before I share with you this tool that you can use to also profit and make money as prices hits lower. So this is Wilmar here on my 1GT, one good trend system, whereby we had some bearish signal coming out, so it kind of alerts us to it, and that's the reason why a short position can be taken in terms of downside targets being drawn as well. Alright, so you got this bearish signal right here on the 29th of August. You can see prices just consolidated a little bit sideways, and it just sold off as we broke the $4 that I talked about. It just went down, and this is where right now, alright, of course there are no exits yet on this target. So you can find out a little bit more on this system by attending one of those free webcasts. I'll not talk too much about it. I'll probably put the link somewhere around this video. You can go to attend one of these webcasts to learn a bit more, but it's how having a system can guide you as well. I think in a bear market, you definitely want to have a system, because if you don't have a system and you're just holding on to stocks blindly and you have no idea whether is it like a bearish signal coming out, and perhaps you're still thinking that it's still bullish, it's still going up, but actually it has turned bearish, it's coming down, and you're just holding on to it blindly, that can be really dangerous. So first thing first, in the bear market, you want to have a system that can guide you. No emotions. You just want to get out if it's time to get out. You want to reduce your losses, and instead tweak your, kind of mindset and think about how you can profit and make money as it goes down. So I think that's the first step as well, right? So let's take like a few more counters before I dive into exactly how we do it. All right, so there's one more stock which is quite popular, is a Singapore tech stock called AEM, right? AEM, one of those stocks that I covered a few times. In fact, one of those more stable Singapore technology counter, but unfortunately we kind of broke certain support levels over the past few days. In fact, just yesterday on the 12th of October, there were some downside targets that were drawn because we broke this very critical $3.90 support level. So this 390 is really important. You see, we've been holding above it since July last year. I would say more than a year already. We rounded about 1, 2, 3, 4, 5 or 6 times, right? But somehow yesterday we kind of broke that support, the 390 support, and sellers started to come back, and that's where the downside targets were drawn, whereby short positions can actually be taken to ride the downside. Yes, to profit as it hits even lower. So there were some downside targets that were drawn, all right, all the way to next support level, about $3.20 to $3.30. You can see about 13 to 14% downside that can actually happen. So let's take a look at what it says today, right now, just after one day, and see whether that has played out. And if yes, then how do we actually do it and actually make money as it goes down? AEM here live, all right, and today is the 13th of October, Thursday, all right, and I just mentioned yesterday on the 12th of October, there were some downside targets that were drawn. Short positions can potentially be taken as we broke this support level at that $3.90. And you look at this right here, as I say, we kind of rebounded many times, 1, 2, 3, 4, 5, and then we kind of broke down, and that's where downside targets were drawn, because there was definitely some signs of the trend turning down, and it would not be good if that support level that's been holding so many times has actually broken down. All right, so there some downside targets were drawn, and we have kind of traded lower. You can see we kind of broke down the next support about 360, and we went to our target at about $3.20, right? So that's where it would be good to also cover back some positions. That means to buy back. If you take a short positions and it goes down, and then you start to buy back, so you can buy back the stock right now, maybe at 321, 322. That would be good to lock in some profits, because the downside that you have wrote down would be about 17 to 16% in just about one day. Does it make sense? All right, so that would be like AEM. Of course, in this counter as well, we do have like a bearish signal on the system. That's why it guides us to take like a short position. So if you're holding on to long positions, like holding on to stocks like this, then you want to be careful if you see like a bearish signal, because that's where you can hit lower. You want to probably get out, cut loss, and reduce your exposure. Right, so let me just share with you what it says on my 1GT system first, all right, before I show you exactly how we do it and how to actually take a short position legally. Alright, so this is AEM on my 1GT system. So I mentioned, there were some signs of weakness that came in over the past few weeks, and just most recently, somewhere in like a 5th of September, we got this like a red arrow down. It's like a bearish signal. You want to be careful if you see that. If you're holding on to stocks like this, then you want to be, you want to take some, steps to probably reduce some exposure, maybe even cut your losses as well, right? So we got this bearish signal, all right, started to push down, and got to exit, and then we got the new bearish signal that just came in on the 11th of October, right, just before the massive sell down that we've seen over the past few days, right, just before it actually broke the 390 support level. And the next day, you can see we just broke down and it went all the way to like about 320 plus today, all right? So this is the bearish signal that kind of alerted us to kind of take a short positions, like how I've shown you guys just now, right? So let me just dive back into the platform that we use on how you actually profit from the downside in the bear market, right? In not any stocks, right? Most of the stocks, we can do it using what we call CFD. I'll talk about it in a bit. So let me share with you this tool that you can use that's called CFD, all right? Contract for difference. So basically what you need to do is you need to have a CFD account, all right? In Philips Securities, where I'm a broker, that's where you have a CFD account that will be tagged onto one of the main cash account types, all right? And once you have a CFD account, you can fund the account and you can trade CFD, right? So what is CFD? So CFD stands for contract for difference. Basically, you're concerned about the difference in the prices, whether it's a long or short position. So most people think that CFD is always like about shorting, it's about profiting from the downside. Not really. You can also buy stocks there. Basically when you buy, you want to buy low, it goes up, you sell, and you make money, right? So you can also buy stocks there. You can take a long position, right? And not only that, you can take what we call a short positions, like what I told you just now, right? Basically, in a bear market, when stocks are heading lower and lower, when it's weaker, market is pushing lower, that's where you can actually profit from the downside. That means you make money as it goes lower. And how you do that? You take a short position. Take a short position means you short, all right? That means you sell first. Yes, you sell first. all right, and then it goes down, and you buy back. Does it make sense? Right? You sell first, and of course, when you sell, you want the price to go down so you can buy lower. You just do it opposite, right? Instead of buying low and sell high, now you want to sell high, and hopefully prices goes down, and you buy back low, and that's how you make money in a bear market. Right? You make money as price goes lower, and just like what we have shown you just now on a few stocks that positions were taken, there were some downside targets, you actually profit as it hits lower, right? Especially if the stock is in the downtrend, you got a bearish signal, and it broke certain key support level. That's where you want to get prepared to ride the downside like what you've seen. All right, so that's how you can do it. CFD, contract for difference. I'll just place the link below. You want to find a little bit more. All right, you can come on board as a client of mine in Philips Securities, whereby we have a full set of trainings I prepared for my clients, all right, to learn a bit more on CFD and how do you use it effectively as well. All right, so that's the first thing about CFD. You can long and you can also short to ride the downside. The next thing about CFD is that you can do some leverage. So normally in like the cash account, which most people have, I mean, there's pretty much no leverage. I mean, you have how much cash? Let's say you have $10,000. You fund the account and then you just pay for the stock in full, and then you own the stock, and that's pretty much about it. There's no really much leverage unless you have like a margin account and all that, but that's a video for another day, right? But basically for CFD, there is some kind of leverage. That means you can buy more or maybe short more than what you have. So that means, let's say you fund the account with like $10,000. So in the normal case, let's say you put $10,000, you buy $10,000, and then that's about it, right? But for CFD, or you can put $10,000, and effectively you can leverage up to like 2 times, 3 times, 5 times, 10 times of your capital. That means like $10,000, you can actually buy up to like $100,000, right? For certain stocks, right? Some of those stocks which is like 10% initial margin. That means you need like 10% of that capital, all right, to open that position, right? For stocks which like a 50% margin, it's like 2 times leverage. So essentially, you can leverage. You can buy more than the cash you have. Of course, if you do that, then there'll be what we call a financing charge for CFD as well. But it does allows you a little bit of flexibility in terms of making more efficient use of your capital, all right, for CFD. And of course, the thing about CFD is that you don't buy and you just leave the stock there and don't bother about it for a couple of months or few years. Not really, right? It's a little more of a short to mid-term, can be 2 weeks, 3 weeks, 1 month, max 2 months kind of a outlook or a position that you want to take, and it's what you can use CFD with, right? To kind of like take a position for that short-term price action, for the short-term move that you want, all right, and profit from there just by a very small capital. So that's how you can leverage, right? So let me just share with you on I mean, pretty much these are some of the stocks that in our watch list for a bit more downside. In fact, the market has just opened after lunch, right? So I talked about like Wilmar right here previously. As I mentioned, we broke the $4. So you can just right click on Wilmar. You can see that the price is about $355, right? So you have taken a short position on CFD. Like as I mentioned, we broke the $4 mark at $390, at $388 or something. Then, all right, you can take a short position. You can just key the number of quantity of shares. All right, so let's say you want to sell, just pretend that it's like $3.84. So let's say it's like $3.85 then. So pretend, all right. So let's say we have broke the $4. Price now is $3.84 or $3.85, and you take a short position. You sell 1,000 shares at $3.85. So you want the price to go down. Of course, this is assuming that it's not happened yet, but of course, price has came down as our targets. So I'll come to that in a bit. But that's how you can place an order to sell, right? Assuming that this is $3.85, you want to hit the market. And look at this right here. So this is the contract value. So let's just put like 10,000 shares. So 10,000 shares would be about $38,500. That's the contract value. But look at this margin requirement, which would be like 10%. So what is this margin requirement about? So as I mentioned, CFD allows you a little bit of leverage, right? Leverage. So you can leverage up to like 3 times, 5 times, 10 times, and of course different counter depends. So for Wilmar, it is 10% initial margin, which means it's 10 times leverage. That means for this position, let's say you sell 10,000 shares at $3.85, you want the price to go down. How much capital do you need? How much funds will you actually use up to open this short position? All right, and the answer is right here. So $38,500 would be the contract value. You actually need 10% of $38,500, which means it's $3,850. So with $3,850, you can actually open this position. That's what I call leverage, right? Of course, if you have like more funds in your CFD account, if you fund your CFD account with like $20,000, $30,000, of course, then those are just funds sitting there you can use to buy or to short other stocks. But essentially for this position, you only need $3,850 to open this position. Does it make sense? All right, and when you do that when you open, you submit your order, it's done. Let's say you short this stock at 385 or 390, it comes back down. What do? You want to buy back this stock, and yes, let's say now price have gone down to like 354, and you want to buy back 10,000 shares at 354. You just hit the buy button and you buy back how many shares that you have at $3.54. Does it make sense? And that's where you make like a 30%, I mean not say 30%, I mean 30 cents, sorry, 30 cents gain by riding downside, just by selling high, hoping for price to go down, all right, and then you buy back and you make money as prices head lower, right? So that's for Wilmar. I mean, just like what we have covered just now for Wilmar, one of those stocks. And let me just show you again. So this is Wilmar that I mentioned. There were some downside targets that were drawn. You have kind of like traded lower, hit out targets. For me now, I think it's good to buy back, to cover back some position, because we have already traded lower by about 11 to 12%. Right? In fact, what you could do is also take steps to protect profits. That means you can have your stop loss, a buy stop loss. That means if you to go back up a certain level, you just buy and get out. All right, you still make money. You don't let it rebound all the way back up again, right? Okay, so that's what you can do. All right, so that's for Wilmar. All right, so maybe another stock that we covered just now would be I think we covered on AEM as well. So AEM 320. All right, so we kind of like broke, as I mentioned, the 390 level. All right, because now prices have gone down to about $3.20 as well. So let's take a look at AEM again, as mentioned just now. Yeah, we have kind of like sold off quite badly. As I say, when we broke this 390, it's a really not a good thing, all right, and that's where we have been holding really well. But when we broke it, that's where short positions can be taken. So yeah, if we shorted then at 388 or 386 or something, I mean just below the 390 as it broke down, because the volume was quite strong as well. That is where now that it has came down by more than 16%. It's like 319 or 320 right now. You can see that we are kind of like attempting to break the $3.20. So we could actually see a bit more downside. I mean, if the 320 don't hold, I mean, this was where we were, holding above. You can see a couple of rebounds here at 320. You can see we neared it as well. So 320 is quite key. It's a little bit of a temp support, but if that don't hold as well, we might potentially hit to like $3 to even the 280. All right, pretty much back to where we were in 2020 as well. All right, but what we can do if we have shorted then, all right, just like what I showed you guys, you have shorted then. Let me just show you right here. You have shorted AEM at about like 385 or 380. Now it's 320. That's where you can take steps to buy back. I mean, you can buy back 10,000 shares at 321, or if you want to queue lower at 315 or something, right? But for me, I think you don't want to be greedy because it came down by quite a lot. All right, so that's where you want to take steps to even just buy back, or maybe set a stop loss if it were to rebound back above a certain level. For example, if you have shorted at 385 and now it's 320, what you could do is this, right? You could set a stop loss. That means at about maybe like $3.30, $3.32. All right, in case it were to go back up above 332. All right, that's where you want to get out. You want to just buy back and get out. All right, you make a profit because you have came down anyway. All right, so you can lower your stop loss to protect your profits that you have already got it, right? Because the price have headed lower. So you can have a stop loss, or you can simply just buy back the shares right away to cover back, all right, the short positions and make that money right away. All right, so that is how you can do it. You can just buy back 10,000 shares at 321, or just hit the market, buy back and close the position, and that's where you make that money. Right, so that is for AEM. That's for AEM, the stock that I just mentioned just now, where some downside targets were drawn, and you can actually profit from the downside. So let me just share with you maybe one stock right now. Like for example, let's say we are looking at this stock called Frencken, right? So Frencken right here. Right, so let's pull out the chart of Frencken. Let's take a look at it. So Frencken is this stock right here. Right? So this is Frencken. It's been on pretty much a downtrend, I would say, since the beginning of the year. I've covered it a few times. All those tech stocks, really weak, all right, very strong downtrend. Over the past few weeks, we have broke this support level at about $1. You can see right here with $1 we went to about 90 cents, rebounded, all right, and then we retested this $1 right here. Unfortunately, we couldn't get up, and sellers came back and we traded back down again, back to the 90 cents support level. But the thing is this, right, over the past few days, it seems like this 90 cents, right, this 90 cents is not holding as well. We have come broke the 90 cents. So what I think is that there could potentially be more downside as well. There could potentially be more downside. We might hit down to the next support level, all right, maybe all the way to like 70 cents or maybe even 60 cents could be the next support level. So that's where you can actually take a short positions, all right, to ride the downside, to profit as price, or to hit lower. I mean, if you're holding on to stock like this, then you want to be careful, all right? You want to have a plan to get out, to stop loss, to reduce your exposure, all right? And instead think, all right, change your mindset or profit as it hits even lower, right? So in this case right now, like let's say you want to take a short position at 0.85, right? Maybe you can just rebound a little bit like 85 or 86. Let me just show you, for example, let's say Frencken, right? Just right click trade, all right? So you want to take a short, so you want to sell first. So you're taking a short position means you sell first, right? You sell first, right? It's not illegal, it's correct, right? You can do that. So you sell first, so you sell at like maybe 0.86. I'm just giving an example, right? So 0.86 maybe for like 10,000 shares, right? So 10,000 shares, 0.86. You can place an order. I'll not place the order, all right? I'll look at it in a bit, but let's just assume I'm showing you guys how to do it. So 10,000 shares, 0.86. You can see the contract value is about $8,600. That means you sell, all right, and that is the contract value, $8,600. And in this case for Frencken, you can see that the initial margin is 30%, right? 30%. Previously it was like 10%, right? So that's like 10 times leverage. So 30% is about 3 times leverage. That means you need 30% of this contract value. That means you need $2,580, right, in your account to open this short position, all right, of $8,600. So how do you get this 2,580? Very simple. It's just 30% of $8,600. You can just press on a calculator, it's the same amount. Does it make sense? Right, so that's how you can take a short position. And of course, once the order is done, let's say you short at 0.86, then you want prices to go lower, right? To go lower, maybe to go down to like 75, 70 cents, or maybe even lower. It depends, right? But as it goes lower, you actually profit and make money as it hits lower. So let's assume it goes down to like 70 cents or 65 cents or something, 60 cents. That's where you can buy back. And when you buy back, just place another buy order. This time click on buy, all right, and you buy back at a lower price. That's how you can use CFD, all right, to profit from the downside. Maybe let's take a look at what it says on my system for Frencken. Let me just to give a little bit more understanding about Frencken. So you can see Frencken was one of those really weak counters, a couple of bearish signals that we had since the beginning of the year. Look at this right here. Maybe since like December last year, we got a bearish red arrow down, just go down, right? Another red arrow, bearish signal, it went down, bearish signal, it just traded and tanked down. All right, look, the most recent one was another bearish signal somewhere in August. It just traded down, got exit, and this is it, right? On the 21st of September, just last month, we got this bearish signal. You can see this started to just boom, and it broke the $1.10, even the $1 gave way, and we just pushed down. So that's how having a system can help as well. I mean, CFD is a tool that you can use to short it, but how do you know when to short, when to get in, when to get out, how to be alerted as well? That's how having a system help as well. So you can just find out a bit more about this system. I'm not talk too much about it, but just want to give you an idea on how we have a system to also guide us on what counters to short in the first place, right? I mean, so you have CFD, but you don't know what to short, then also no point, right? So that's how you have a system to guide you, all right? And yeah, this is Frencken here. Started to push down. All right, there are still no exits yet on this bearish signal, and of course the trend bar is still like red in color, a bearish signal. So as I say, if we go below that 90 cents mark, all right, we might start to push lower. It's more bearish below 90 cents, and that's where short positions can be taken. All right, short positions can be taken to actually ride the downside. And when you take short positions, right, you want to have a plan as well. You don't just short and just leave it there and do nothing and then come back in a few months to check what happens, right? No, you want to have a plan, right? So if it goes down, you want to take steps to protect your profits. Make sure you lower down your stop loss, and it goes lower, you lower it down further, so you protect your profits as it goes lower. All right, and you can take steps to buy back at a low. And what you want to do is also, all right, to have a stop loss in case it were to rebound back up to a certain price level. You want to get out, because if it goes up, it's not good because you're taking a short position. You want it to go down, right? If it goes up to a certain level, right, that's where you want to take steps to get out, to cut your losses, right? That's because you want it to go down. But in any case, if it goes up, you want to take steps to make sure that you don't let your losses run, right? You cut your losses because it's pretty much in the wrong direction and price have rebound above a certain key level. So let's say if you short at like 87 or 86 and it goes back above that 90 cents, then it might not be a good thing. That shows that there could be some strength coming back. That's when you want to get out as well. All right, but in any case, right now, it looks weak. All right, anything below 90 cents, as I say, is more bearish. That's where CFD shorts, all right, can be taken to actually profit from the downside. All right, so yeah, given you kind of a quick understanding of how you can actually use CFD, all right, contract for difference, to take short positions. As I say, we actually have a bit more trainings for clients. So if you don't have a CFD account or you have an account under me, you're not too sure whether you have CFD or not, please just reach out to me or my team. All right, and will give you the right clients membership area to learn a bit more. If you do not have an account with me yet, go ahead, click on the link just below this video to find out a little bit more, and that's where you can come on board as a client. All right, and that's where you get some of our top ideas by WhatsApp faster. In fact, some of those stocks that we talk about, we actually alerted clients to it as well. I think for AEM as well, and that's where you can be alerted by WhatsApp as well as a client of mine in Phillip Securities, right? So I hope you like this video. I've given you a quick understanding of what to do in a bear market, right? Not just to buy stocks which are weak, all right? I mean, if you just buy and buy and it goes down and down, that's where you can be stuck. You don't want to do that, all right? You can think about getting it on stocks only that are strong, a really strong, very strong uptrend. They came down a little bit in the short term. There's still some good upside. Yes, you can focus on that, or you can also just do nothing and wait for really, signs of reversal for some stocks that have headed lower. That's where you can wait for them to really see signs of recovery before entering. That's what you can do. Or next one would be to take short positions, right? Using CFD to profit as prices head down, while others are just holding on to them blindly. You are actually making money as prices head down. Alright, so Joey here, I hope you like this video. Thank you so much for watching. Click on the link below to find out a little bit more on how you can become a client of mine, Phillip, alright? Or even to find out a bit more on the system that I have that I've shown you guys just now, the 1G system. You can attend one of those free webcasts that we're still holding. Thank you so much for watching. Take care.